Good morning, everyone. Welcome to our today's daily market outlook. It's Tuesday, 11th of September 2012. We remember, of course, the tragedy that happened in the States this day, and we pay tribute to all the victims of the biggest terrorist attack so far seen in the world's history. And of course, we remember them. From the market, we have some movements at the beginning of the European session, as euro is back to strength and back above 128 following a recent corrective action of the latest peak at 128.13 posted last Friday. The shallow correction so far hit around 127.50, our initial support, with the quite positive sentiment still being fully in play, as the Angela Merkel, one of the key figures in the Eurozone, won additional support from one of sister parties of her party, as the negotiations about decision of the German court that is due tomorrow are accelerating now, and basically the south of Germany was broadly against the current action, even saying it's sort of illegal. But yesterday's good support given to Merkel gives more boost now to the plan of further the saving the European Union. The German court said that they will not delay anymore, and the decision will be made tomorrow. So basically, all eyes are on this event. As said, the euro remains well supported, though still below 128.13, but recent move in the early hours of today is seeing a possibility for further extension. However, we have not to forget that a very strong barrier lies just above these levels, where we have a number of strong obstacles, trend line 200 days moving average, previous high. So we'll be watching carefully euro in case of a break of this important barrier resistance zone, which is above 128, approximately 128.20, then we might see the quite good acceleration towards the upside. Sterling also is back to strength, as at the beginning of European session, as it briefly broke above the recent consolidation range at 160.15, 160.27 seen this morning, just ahead of 160.33, with improving hourly structure, seeing more potential towards the downside, while the other two majors remain under pressure. Dollar yen was this morning in the still moving within a very narrow range in the sideways mode, following the bounce of 78.00, and the tone is more skewed towards the downside, as no much action seen from the corrective bounce of 78, and still negative near-term structure keeps the more focus towards the downside, as well as Euro Swiss, that is so far this morning attack at the current consolidative base at 96.30, where the basing attempt is seen, but upside remains well capped for now, seeing more potential towards the downside. More of all this, of course, we will see in our technical part, with just a brief look at the commodities. The crude oil is still within the range, although more skewed towards the upside. The current price action holding above 96, as the price action remains entrenched within 94 and the 97.60 range, with basically sideways movement seen in neutral short-term studies, seeing more potential for further ranging unless either side of the range is broken, while gold gets a small support of yesterday's 1724. Overnight's 1724 low, ticking above 1730. Basically, the gold is expecting, as most instruments, decision, key German, awaiting the German ruling on the Eurozone bailout fund, and of course US Federal Reserve decision on possible measures to stimulate the economy, as we already elaborated. This recent quite weak data released from US are now prompting President Obama and lawmakers in US to, especially the Fed's president, to prompt the action and go for further stimulation, so-called quantitative easing 3, as current situation is not very promising and sees more potential of further decreasing in case of not taking any action. From today's calendar, some more events seen compared to yesterday. The Eurozone WPI already released, the German wholesale price index for August has been released. 1.1 is released. We don't see the update in our calendar compared to 0.3%. So quite much better. And the delayed reaction of euro is basically reaction on this release. Further, 8:30 GMT is UK's trade balance for July. Some narrowing in the trading gap to minus 8.9 billion sterling is seen compared to the gap of 10.1 billion in month of June. And basically that will be all from European side. From Americas, Canada starts at 12:15 GMT with the August housing starts. Slight decrease is forecasted at 206,000 compared to 209,000, and Canadian trade balance is expected again to show is forecasted to show narrowing in the gap to 1.9 billion Canadian dollars compared to June's gap of 1.8 billion Canadian dollars. And from United States at 12:30 GMT, the same time with Canadian trade balance, U.S. trade balance for July, widening the gap, the negative reading minus $44.2 billion is forecasted for release of month of July compared to gap of 42.9 billion US dollar in June. So basically only United States are showing, according to the forecasts, that the trading gap is widening, while the others are, according to the forecast, again narrowing. And that would be all now, not to waste more of our time. Let's go and take a look in the currencies and the commodities. As said, at the end of session, you can submit your questions if we miss anything, or you have any other instrument that you would like to take a look at. You feel free to, at the end of the session, feel free to submit your question. Starting with the euro against US dollar. The hourly structure is now improving slightly, as indicators starting to point higher, as the near-term base and the support was found at 127.50. This was our initial support, with the bounce higher above 128, testing levels close to, basically testing exactly 128.12 compared to 128.13, testing the previous high. As said, more significant, very strong barrier lies just ahead of current congestion at 128.23 is the high of 21st of May. At 128.35 is the 200 days moving average, and 128.40 is the main bear trend line drawn of 130.485 annual peak for 2012. And this, as we said yesterday, is expected to give us more or less give us a lot of hard time in order to break it. But once cleared, it's going to be as a trigger for a further acceleration higher and extension of a short-term uptrend from 120.42, as a break above recent peaks at 127.45 and 128 now likely opens way towards 129, 130 zone. Of course, we need to see the clearance of this very important barrier that will open the way towards 129.00 and then 129.34, 61.8% retracement of 134.85 to 120.42 descent. Failure to break higher might see again further congestion at this zone, with the 127, with 127 offering quite good support at this point. That marks approximately 38.2% retracement of the latest top leg from 125 to 128.13, as well as trend line support. And basically, near-term price action would weaken in case of downside extension and break below 127. That will open next supports at 126.60 and more significant 126. 40 previous range top along with 126.20, 61.8% retracement. Then we'll be talking about stronger reversal and sidelining the current bulls, while the near-term price action is still well supported and pointing higher. We're looking for a possible break above 128.13 and a more significant 128.20, resistance zone. The cable has this similar situation as the brief corrective action of 160.33 last Friday's peak, when the pair surged through important and psychological 160 barrier, found support at 159.58, being contained by hourly 55 days exponential moving average, and the current bounce higher above the near-term congestion at 160.15 sees potential for a further extension higher. Still positive situation on the hourly chart, while quite extended conditions on the 4-hour one, although still seeing room for a further extension higher. See more potential towards the upside at this point, as the pair remains in the strong uptrend, with the slight warning signal seen on the studies on the 4-hour, on the daily chart, approaching the overbought territory that might see some hesitation at these points. Break above, clear break above 160.13 is to open the next barrier at 160.60 and 161.00 on a break, while on the downside immediate supports are 159.80 and more significant 159.50. The first one is reinforced by 55 days exponential moving average, while a break below 159.50 would open 159.26, which marks 38.2% retracement, and more significant 159 zone, where we have a previous peak at 159.11. 159.10 is the 55 days exponential moving average on the 4-hour chart, and 50% retracement at 158.93. So quite tough support at 159.00, loss of which likely to trigger further corrective action, and then we have the trend line support at 158.74 currently, ahead of 61.8% retracement at 158.60. As said, the near-term price action remains skewed towards the upside, but failure to break above 160.33 might risk further congestion, while loss of on the downside, in case of failure, loss of 159.50 initial support might be signaling near-term double top, and that could be signal for a stronger reversal. And the dollar yen, quite negative tone continues to dominate following last Friday's sharp fall that dipped to 78.00. Exactly, this is the lower boundary of strong 78.20, 78.00 base, with a brief recovery attempt seen capped at the initial resistance at 78.30, also limited by descending 20 days exponential moving average on the hourly chart. Narrow range established sees the near-term action in the sideways mode, but still negative outlook according to the negative 4-hour chart studies sees the downside the more vulnerable at this point, and unless we see regain of our key barriers at 78.80 and 79.00, more prospect is seen towards the downside, as a break of 78.00. And the next key support at 77.65 is seen as a trigger for extension of the larger uptrend from 84.17. On the upside, said the only regain of 78.80 and 79.00 would provide temporary relief, as moving averages 55 days at 78.80 now offers initial barrier, the initial dynamic barrier, and then 90 days one along with the previous peaks at 79.00 and the 200 days moving average at 79.00. 29 with that cross seen at the end of August, where the 90 days moving average crossed below 200 days moving average, putting additional pressure on the pair. And the dollar Swiss finally broke below its near-term base at 94.30, 94.14 seen so far, penetrating important and strong 94.00, 94.20 support, where we have the previous lows of mid-June, as well as 94.00 round figure support, 61.8% Fibonacci retracement of uplift from 90.41 to 99.70. And of course the 200 days moving average currently at 93.99, quite a strong support level, and significant break of which is to be triggered for a further extension of larger downtrend from 99.70. A negative tone dominates on the daily chart, with the studies slightly extended, but yet no any signal of reversal being generated, with the hourly studies and 4-hour too being quite negative, and seeing more potential towards the downside. Some hesitation could be seen on 94.00 level, but acceleration seen on a break is very likely, as most likely number of stops has been parked just under this strong support level, and of course triggering stops will accelerate the downside action. And the gold has found some ground at 1724 overnight, following a pullback from last Friday's peak at 1741, currently trading at 1731, more sideways in the near term, but still more positive, as the pair holds above initial dynamic support 20 days moving average for now, with the studies attempting slightly above their midlines. 4-hour chart, quite extended conditions, and already started to point lower. Do not rule out further extension, further corrective action and extension towards the downside, with the 1713 and 1700 offering quite good support ahead of 1688 previous low. And actually this is the higher base at this point. Close to this is 38.2% retracement, as well as trendline support. Basically, if we see break below 1680.70, then it could be quite risky for the current structure. Otherwise, more focus seen towards the upside, although quite extended and overbought conditions on daily chart. See potential as the pair briefly broke, the price briefly broke above the channel resistance. That could be a signal for some stronger reversal. For now, the price in the near term remains quite good, supported above 1724. That's also the 55 days moving average, break of which is to signal further easing. As said, quite extended conditions on the daily chart see risk of deep reversal, as the gold price rallied strongly following a break above important 1640 and 1700 level, with the short-term focus still seen towards the upside after a correction will be finished with the 1762 and the 1790 seen as the short-term focus. On the downside, as said, a loss of important 1680-70 zone could be a trigger for a stronger corrective action. And briefly to the crude oil, as we said at the beginning, basically nothing much is happening. The oil price is entrenched within the range and moves in the sideways mode in past a couple of days, following a pullback of 98.27 low high of 23rd of August, with basically neutral short-term tone, seeing a break of either side as a trigger for the fresh direction. On the downside, immediate support lies at 90. Give me just a second. At 96, where is also the 55 days moving average, and then 95.36 ahead of the range floor at 94 zone. On the upside, the current congestion top is at around 96.70 ahead of 97, and then 97.35 and 97.64 range top break of which is to refocus 98.00 and then 98.27. As on the downside, the loss of 94 strong support would signal further corrective action of the broader uptrend from 77.27 that peaked so far at 98.27, but several false breaks above 200 days moving average still require caution in oil price movements. As long as the price remains capped under this important dynamic barrier, we might see more risk towards the downside. Of course, tomorrow's U.S. crude inventories will give some more light in the and give us more clues in the near-term price action of the crude oil. And that was all from our side. Please, if you have your questions, you can submit them now. Okay, it seems that we don't have any questions for today. It was a rather quiet overnight session with some more action seen in the European beginning of Europe. In this case, I would like again to thank you all for attending our session and invite you for tomorrow's one at the same time at 7:00 GMT, 10 o'clock local Cyprus time. Until then, I wish you a nice day and, of course, good luck and very successful and profitable trading.